Sher Russell for mining.com.au, and joining me today is Simon Wensley, the Managing Director for Metro Mining. Simon, it's great to see you this morning. How are you?
Yeah, good morning.
Thanks for jumping on this morning. I'm glad you had some time to speak because there's been some big moves in the aluminium market over the weekend. And I wanted to ask you a couple of questions around how this impacts Metro Mining. I guess first and foremost, the Guinea government has recently said that it is going to suspend bauxite mining. Are you able to talk to what's actually happened here?
Yeah, sure, Shay. Thanks very much for the question and the opportunity. Look, the news so far is that the Guinea government has suspended the exports of one particular exporter. It's a pretty large exporter. It exports about 14 million tons per year. It's not particularly clear as to why that's happened. Obviously, the Guinea itself has been under military rule for the last couple of years, and elections have been sort of postponed. And in that environment, I guess anything can happen. The particular exporter in question is not a Chinese exporter. It's another country. So it's not protected, I suppose, by some of those big political bilateral relationships to the same extent. So I guess the implication here is that obviously Guinea's become a huge exporter of bauxite over the last sort of 10 to 15 years, and now exports probably almost half of the traded bauxite in the world. And what's been occurring as a trend over the last couple of years is that in a way that's become increasingly uncomfortable for a lot of the players in this market, and having, if you like, all their eggs in one basket, and seeking more diversity of supply. And I think that's where in a way Metro's strategy to expand and bring on more volume for those customers has been based in that sort of diversity of supply space.
So what does this mean for Metro Mining? Are you seeing existing and new customers reaching out, trying to secure some of your bauxite?
Yes, absolutely. I mean, I think the first impact is that, we've talked before about the dynamic in this market, the very strong growth in traded supply, and we've kind of likened that to the iron ore market of the early 2000s. And of course, at that time, you saw tremendous growth in demand for traded iron ore, and therefore prices re-rated structurally to a different place. I think we've talked again about this, and this is happening in real time, right? This is exactly what's going on at the moment, where we're still seeing huge demand for aluminium from electric vehicles, renewable energy technologies, transportation, batteries, and of course the old things, construction. Of course, China's just stimulated its construction sector again. So all of those things are driving aluminium demand. That's driving alumina demand, and therefore bauxite demand. But there are supply constraints in this market, and so that's what has been sort of driving both volume and price. And so look, I wouldn't be surprised. I mean, the aluminium price and futures have jumped massively. The alumina futures and prices have skyrocketed over the last week or so on already a very high level. And so I wouldn't be surprised if we're going to see bauxite over $100 per ton. That's kind of where iron ore went at this time, at the same time, in that space. So I guess that's the first sort of market environment. But for Metro, our customers, of course, are they have a diverse set of suppliers. Those who have relied on Guinea or this particular customer, of course, going to need additional volume. We have existing contracts with customers. We will work with those players to see whether we can free up more volume, et cetera, over the next months to help them out. And in the longer term, from a market positioning and a marketing strategy point of view, it's really all about positioning Metro as a reliable supplier from a low sovereign risk jurisdiction that is very close to the market. So those are the things that we've been pushing. The positioning for the last few years, and I guess that just what's happening now is just reinforces, even if it only stays in place for a short period of time. It just reinforces that strategy.
It certainly does. The recent events definitely emphasise the low sovereign risk, as you so succinctly put it there. But I want to bring this back to what this means for metro mining going into next year. Now, I know this year you have created mini ports at the top end of Queensland to make sure that you can meet those export markets. You've increased production. It's been a big 2024. So, what does 2025 look like for you going forward?
Yeah. No, it's a huge, yeah, it's been a huge 2024, the big, implementation of our expansion. That's going well. We're now operating in the sort of target zone that we put in place at the beginning of the year. So we're operating around about that 7 million ton per annum type rate. So that was our focus for this year. I guess, this market tightness and I guess the demand we're seeing from both existing and new customers, sort of really pushes us to look at how we can even creep further for next year. So my engineering team and operating teams are madly sort of looking at all the different ways they might be able to sort of squeeze a bit more product out next year. So there's a few things we're looking at, including the mining side. That tends to be relatively easily scalable with trucks and loaders, etc. It's really about how quickly and we can load barges, turn them around, and then get them out through a tidally constrained sort of river mouth to our transhippers. So I think that is where we're really focusing on. That's the more difficult thing to both simulate and then execute in terms of what we do.
Listen, Simon, it's been a big year, and it sounds like you're going to have an even bigger year next year, especially with these tailwinds happening in the market. Thank you so much for being here today, and I look forward to what comes next.
Oh, it's been a pleasure.